So we have Dinshaw, Irani, CEO, Helios Mutual Fund, who joins in. Hi, Dinshaw. Good to see you in. I was wondering whether you have changed something new with regard to the spectacles. No, it's the old one, as fashionable as ever. Good to see. Dinshaw, how are you feeling about the markets? How the sentiment has turned in a matter of around 72 hours. STT hike. Everyone was disappointed. It hurt sentiment more than anything. And suddenly you have the trade deal. Suddenly you have talk about being oversold. Earnings need to pick up, as the famous Hindi dialogue said, entertainment, entertainment, entertainment. I think for now it is earnings, earnings, earnings need to show up. That's what's going to lead the markets higher. How are you feeling about the market now?
First of all, thank you, Nigel, for having me on your show, and a very good afternoon to you and your viewers. I thought we'll start off with our favorite call on IT sell rather than on the markets as such. Probably we'll take that up later. But the fact is that we were...
Dinshaw, let's talk about the markets later. The sell call now, do you stick by that? Do you think the fears are over-exaggerated? Is it providing some kind of a buying opportunity with the index down 7% and you have market capitalization erosion of around 11 lakh? Let's take that first.
Okay. So, Nigel, actually, you heard from Anthropic and Palantir last night, but you heard from us probably a year back, specifically February of 25 is when we called out that AI is going to be a big disruptor for IT, and we had seen early signs at that point in time. And we still don't believe there's been a reset in that segment, because I don't think the companies are right now even gearing up for that as such. TCS to an extent has seen the writing on the wall, and that's why they've been very cautious in terms of adding manpower. In fact, they've been laying off people quite regularly. But I believe that that pyramid on which this whole structure was built, the employee pyramid, that has come under question with AI playing its part. The bottom of the pyramid, which is to control the costs for all these IT companies, their manpower costs for all these companies, all the IT companies, is going to come under question. That bottom is going to get squeezed. I mean, the bottom of the pyramid is going to get squeezed. And as a result, the cost is going to escalate upwards. And that is why that massive reset. And plus, AI is going to play havoc with the initial, I mean, the historic way that we've been doing business in India is basically the man hours into the rate per hour. The man and the hours are going to shrink because of AI. And obviously, I don't know how much rate can compensate for that shrinkage. So I think there's a reset which is happening, and we'll look at it. I don't think this it's done and dusted in IT as such. I think there's more to go in terms of not only the price correction, but in terms of even the fundamentals going off a bit.
Okay, so complete avoid IT sector for now, at least. There is more revenue deflation, which is likely to take place. Valuations could get compressed. Dinshaw, hi. What about PB Fintech? It's a stock that you've liked. Is it still a part of your portfolio? Because the street seems to be spooked by this fundraise, considering they had so much cash in the books and they're going out there and making a large acquisition.
Yeah, so it remains a part of the portfolio, but frankly, Rima, we've also been very cautious in that space, in that particular stock. We're not adding to that name in a rush. I think some kind of understanding has to come there, as in not only in terms of what the management is thinking, because they're also looking at going outside India. They want to become an MNC. I think these all things are, with India giving you such a huge growth option, I don't know why that looking at outside markets for growth. So maybe we'll have to do a rethink out there and see what it goes. But anyway, we're not adding to that position as of now.
Are you considering selling your holding?
No. And even if I was not going to tell you that. But no, as of now, no.
Did you chat with the management and raise the concerns? I mean, I'm sure it's been flagged off by many people in the market. They can see it in the stock price. But have you had any conversation with PB Fintech?
I'm sure my analysts would have had conversations with them. I haven't directly had a chat with them.
Yeah. Okay, all right. Dinshaw, anything else? Since we've got the US trade deal done, chemicals, textiles, those stocks are flaring up. You think it's time to look at it?
So fortunately for us, we had Gokuldas Exports with us, which is a part of our holding. It's a disclosed holding, so I can share that name. And obviously, we had KPR Mills. These were the two stocks in textiles that we held, and that has done phenomenally well. But one more thing out here, Nigel, is that despite the tariffs, if you had seen Gokuldas results, which came last week, they did fairly well in terms of margins. We were of the opinion that the margins would shrink quite drastically, but they did very well. And what argument the management gave on the call was that even the US buyers are right now having a paucity of suppliers. So they are looking at India in a very benign way. And as a result, we have to let go of some margins. But can you imagine with now tariffs coming down 15 to 19 18 for textiles, this is going to be a big boost for all the profitability. In fact, the margins will come back. And I'm sure there's at least FY27 will look a very exciting month, not only for textile companies, but other plays also like auto ancillaries, which saw a lot of compression last year as such. So that way.
So in the earnings season so far, Dinshaw, what is it that you've liked where you are seeing a big potential basis the numbers, the strategy, the commentary that you've added on recently to your portfolio?
So actually, we've basically the quarterly numbers didn't, we haven't changed our portfolio based on the quarterly numbers because we take a slightly longer term view as such. But what we did have noticed in this quarter specifically, and this is a replica of what happened in the September quarter also, that the small cap universe has done far better than the mid cap and the large cap. So basically, small cap has done better than mid caps, and mid caps, I'm talking about earnings growth, has done better than large caps. So if you look at the NSE 500, some 250 odd stocks declared the numbers till the end of Jan, and of which I think the large caps were some 54, 55 odd stocks. The growth there was just 2%. For that, and effectively for the small cap, which was around 120 stocks, which had declared the numbers, the growth rate was north of 40%. So obviously, this is where the excitement lies for us today. And mid caps are around 19 odd percent growth. I think some 70 odd stock has declared the numbers out there. So that way, I think this is what is making us look at the small cap and the mid cap universe more appreciably now.
So you're quite constructive on the markets, it seems, at this juncture. Would that be fair?
Yes, definitely, Nigel. In fact, the worst seems to be over. One saw that in the last year. And with the kind of fiscal loosening that the government has been undertaking and the RBI also on their part has been undertaking, I think that has helped demand come back in a big way. One saw it in the September quarter. One is seeing that effectively even in the December quarter. And I have no doubt, hearing the commentary of various managements after the results, that this particular quarter, the March quarter also looks fairly exciting. So I think the worst is over. From here on, you'll see growth, tariff coming back to normalized levels. I think there's no way FIs won't come back to India.
Let's party soon. Thanks a lot for joining in, Dinshaw, and giving us that comment. And good to end a conversation on an optimistic note. See you soon.
Thank you.